lot of the shitcoin proponents seem to think that you can, you should tokenize everything and put it on the blockchain, right? Like just right on that layer one. This panel is going to be about doing something different than that, which is actually logical, which is putting it on a layer 2, because that actually makes sense, and we're talking about Bitcoin here, not shitcoins. So this panel is moderated by Jesse Knudsen. He's the head of securities at Bitfinex. Please give him a warm welcome to the stage. He's going to be our moderator. Let's keep it going. We've got a couple more hours left, guys. Give him a warm welcome to the stage, please.
There we go. Great, thank you everyone. Really excited about this panel, the future of tokenized capital markets. With me today is Jonathan Crane from Crane Shares. Gabor Gurbax, Chief Strategic Advisor to Tether. Adam Back, CEO and co-founder of Blockstream. All right, on the interest of time, Adam, maybe we'll skip your introduction. I think everybody is probably very familiar with Adam. Gabor, could you maybe do a quick introduction to what you're working on with Hadron?
Yeah, absolutely. So, hi everyone. I look after strategy at Tether, and I am the CEO of Hadron. Hadron by Tether, it's the top digitization platform in the world. We are changing capital markets, and you can issue all kinds of real-world assets that are not shitcoins on Bitcoin on using the Hadron platform. So I'm very excited about this. I spent 15 years on Wall Street. The first asset manager applied for ETF. This was under my direction. So the next generation of assets after the Bitcoin ETF coming to market is through this platform. So I'm excited to work with Adam, Jesse, and Jonathan on bringing those assets to market.
John, can you explain to us who Crane Shares is and what you guys do?
Absolutely. Crane Shares is based in New York City. We're an ETF asset manager. We focus a lot on China, on alternatives, on crypto now, and listing funds on New York Stock Exchange and London. And we're very focused right now on tokenization.
Yeah, to maybe explain a little bit about the thread that ties us all together, we're very interested in looking at how we can bring tokenization to the ETF industry and to do it on a Bitcoin layer 2 like the Liquid Network. So Gabor, what do you think is important or interesting about this idea of bringing the ETF industry on-chain onto Bitcoin?
Yeah, definitely. So maybe just to contextualize, the financial services industry is the largest industry in the world. It's about 35% of global GDP. And every 50 years or so, this industry is changing. It redoes its tech stack. And it is thanks to Bitcoin and tokenization that change is happening now. So 35% of 700 trillion of assets are transforming today and coming to this new type of product, which are tokenized products. In the past, we have seen, you guys know stocks and bonds, and then stocks and bonds ended up getting pulled together in hedge funds, and then they became a little bit more transparent. They became mutual funds, and then they became ETFs, and then they're liquid and they're traded and transparent. And every iteration, things got better, faster, and cheaper. And in each iteration, we created somewhere between 20 and 50 trillion dollars of value. The next iteration after ETFs is tokenized assets, and our bet is that tokenized assets will be built on Bitcoin. And again, the reason it is important is because all these products that are trading right now in the New York Stock Exchange, NASDAQ, and stock exchanges in the world will actually trade on digital asset exchanges, and they will be natively available in your Bitcoin wallet. So we're bringing, like Jonathan's products, the large, the S&P 500s, the NASDAQ 100s, the S&P China Next Index, all to be accessible in your wallet. So instead of dog and cat coins, you will be able to buy the stock market in a Bitcoin native way. So that's why it's important what we're doing.
You'll still be able to buy dog and cat coins, though.
I hope not, but I mean, it's free market, so.
Okay, Jonathan, as a seasoned ETF issuer, what do you see as the benefits for you and your firm to be doing tokenization? Why is this interesting to you?
Absolutely. So as an asset manager, we're always looking for distribution and new liquidity pools. And what we've been seeing is with the strong growth of Tether and stablecoin, there's billions of dollars that are now in tokens and in stablecoin that we've never had access to, okay? And we see the bridge now to accessing those liquidity pools is tokenization of our funds.
And Adam, what do you think are the characteristics of Liquid that make it, specifically suited for issuing financial assets like tokenized ETFs?
Yeah, I mean, I think one differentiator is it's a layer 2, so it's not, the original kind of tokenization technology in the early days of Bitcoin was color coins. So taking a low value Bitcoin transaction and marking some extra data on it. And so my view was that it's going to be more efficient to make a layer that's specialized for that. And that should be a logical step because all other networks are layered. The TCP/IP, that's a base protocol, and then you have VoIP, you have web, you have mail on top. And I think that's the case for Bitcoin too. You have Lightning for retail payments, and it's specialized for it, it's better at it, and you have Liquid specialized for asset issuance, settlement, smart contracting. And another differentiator for Liquid is you have confidential transactions. So as well as having the ability to natively issue assets so that the chain understands you've issued an asset, because it's very hard to write a smart contract if the contracting language can't tell what type an asset is, for example. I can't tell if it's the same type. So you've got the native asset support, and then you've got confidential transactions, which I think is actually quite important to provide confidentiality so that you can't get front run, the market doesn't know, how many shares you're selling, what price they are, or even what you're selling. That's a private contracting matter. And then to go with that, you have support for capital market sort of share registration agents, onboarding to see if you are able to buy that asset from your jurisdiction or if your kind of investor characteristic. And so you have the kind of possibility to do that where all of that logic is actually off-chain and managed by the share registration agent. So you have what feels very Bitcoin-like and permissionless innovation, and just using a Bitcoin-like multi-sig logic, but you get the confidentiality, you get all of the protections and controls you want in a very easy-to-use way. So I think it's proven to be very popular. I think the other differentiator, of course, is it's on a Bitcoin layer 2, and we've seen multiple cases where the institutions have come to look for an asset platform, and they don't want to do that on something which has a regulatory overhang of being an unregistered security or something. They just don't want that embarrassment factor.
Yeah, I would say that the transfer restricted functionality is a really important one for both what Hadron's doing and what Bitfinex Securities is doing, because it lets us kind of tick our KYC AML regulatory box and make sure that only people who are allowed to have the token and don't violate, our prohibited jurisdictions and persons lists, we can tick that box, but we can also let people, once you're on the whitelist, to trade it, really freely and have a Bitcoin or Tether-like user experience. So Gabor, I know that when you guys announced Hadron around this time last year, you had a stat out that 700 different companies reached out to you to do tokenization projects. What are the asset classes and what are the type of issuances that people are talking to you guys about right now?
It's actually now 1,200 businesses in 20 plus nation states, over 100 banks, leading technology companies that came to us. And right now, the distribution of interest is skewing towards fixed income. So bonds, people want to issue bonds because they pay coupons. So that's about probably 40%. About 20-25% is equities, a mix of private equity and traditional equity products. And then we have some alternative assets like commodities and loyalty points and so on. So that would be the other 20 or so percent. I'm excited about the ETF space because of the previous note that I had, which is this is the most traded, most liquid instruments in the world that the world's pensions and our grandmas and grandpas save in. And that structure is fundamentally changing because of tokenization. So very excited particularly about the ETFs coming to this new wrapper and making the market more efficient and more accessible.
So we've seen a real interest in tokenization kind of accelerate over the last maybe 6 or 12 months. You know, we've seen a sea change, I think, in the regulatory approach of the Trump administration around stable coins, even crypto assets. But I think securities regulation might be more challenging. You know, John or Gabor, what are your thoughts on that?
Yeah, I think the Genius Act has helped a lot in the U.S. and then with firms like BlackRock, Fidelity, J.P. Morgan, also coming out with products. That helps too. That helps institutionalize. But just for example, we're working with Hadron and Bitfinex, and our Hadron has helped us with the product architecture and development. And then we're working with Bitfinex and yourself for all the distribution and accessing your hundreds of thousands of users. Through that process, we actually it has not affected. It's been very smooth. It hasn't affected our process. So we're going to be. It's been very straightforward. So we actually haven't had to go to our regulators to be able to do this, which is, I think is very positive.
So maybe the one note to add is, and I think this was a fundamental breakthrough on the Bitcoin ETFs too that I worked on for 10 years. It's basically the current financial system is actually compatible with Bitcoin. And there's a lot of argument against the fiat system, but the actual financial mechanics of the market is compatible, and just bringing it together and offering products in a Bitcoin native way is possible. And people haven't done a lot of the legal work, but we have talked to combined like 6-8 regulators, 4 law firms, and we think that we can bridge traditional finance onto Bitcoin effectively now. And again, so Genius Act happened for stable coins, but I think the Bitcoin ETFs also basically shown that there is interest and there's a way to wrap products and just to bridge Bitcoin and ETFs.
Yeah. And one last thing, I think from a regular standpoint, they're always looking out for protecting shareholders and investors. And I think through the process of tokenization and with blockchain, and they're going to see that there's compliance there is strong, and the audit and all of that. So I think that it will support faster decision making.
Yeah, and maybe another point to mention too is, the role of El Salvador as kind of a novel, as an interesting regulatory jurisdiction. Gabor, how important do you think what El Salvador has done is this part of this project, and maybe our broader thing that we're working on together between Hadron and Bitfinex Securities?
Yeah, so one of the things that El Salvador has done successfully is that whenever a tokenized product is issued in El Salvador, it's actually considered a token. Another great thing that they have done is basically only Bitcoin-based tokens are legal in El Salvador. So they have excluded a lot of scams, just by definition. And the legal framework created for securitization is unique, and actually a lot of other countries are now adopting it. And again, basically if you issue an ETF token in El Salvador, it's considered a token, while it might live as a security in another jurisdiction. And that is enormously beneficial to bringing traditional assets to this new world, new digital world. Again, go ahead, Jesse.
Yeah, I always find it interesting how El Salvador, this small country, has somehow almost uniquely figured out like what's accretive to our industry. While everybody else is sniffing out different crypto assets and how to regulate this and that, they kind of really uniquely figured out that what moves the needle in our industry is Bitcoin, stable coins, and probably tokenized securities, in my opinion. So I always find that kind of interesting. Adam, I think Liquid is probably, maybe people don't even know, I think it's a stealth leader in the RWA and STO industry. Could you put some numbers to that? How big are RWAs and security tokens on the Liquid network at the moment?
Yeah, I mean, I think that there are, there's a lot of talk about real-world assets, but I think in terms of real-world assets, by which I mean assets where the sale happened because of the format, because of the accessibility, because of the global market, because of the long tail phenomena, is probably actually liquid, because I think there are some assets that got securitized where the owner didn't change. You know, somebody said, okay, you can tokenize some treasury stocks, we'll keep it in the fund, you take a box, you know, somebody pays some fees, but on liquid there are a lot of sort of organic things, like the BMN, Blockstream Mining Notes, which dates back a few years. The second iteration of that is around $1 billion now. That's been used so it's a 4-year term product that gives you the Bitcoin mined from a certain amount of hash rate. And that security itself has been used to issue private company bonds to finance mining infrastructure expansion, and those bonds are also securitized and listed on a Bitfinex platform, actually. And the security work and capital placement was done by Stocker, who's also another kind of liquid member, fintech and regulatory work company. And so apart from that, you know, is a very large amount of promissory notes in Mexico, which are small business loans. So that's grown to, I think, about 2 billion now. It's generally growing at about 100 million a month, and it's been going for a few years now. And that is, you know, solving a workflow problem from what was a very paper-based, manual, error-prone process to, you know, kind of skipped, like people in some countries skipped from, you know, no telephone or internet to just like mobile, right? They skipped the fixed line. So I think it's one like that, where they skipped from a paper-based to a blockchain-based solution, and it's solving problems. So people are using it, and it's resulting in capital being placed into a market that didn't really exist in that level of efficiency without it.
John and Gabor, in El Salvador, at Plan B El Salvador last year, I had a chance to talk to Eric Balkunas, and you know, he said the ETF industry was a pirate ship, you know, in the old days, and then he says, okay, you guys are kind of like the pirate ship now. So what do you make of that kind of comparison? And it's interesting that, you know, an ETF issuer is now one of the first kind of big traditional players that's gravitating towards our technology.
Absolutely, yeah. We've watched the ETF industry grow dramatically. I mean, in the States now, it's about a $12 trillion industry. You know, and that, you know, 10 years ago it was probably a $2 trillion industry, $3 trillion. So, you know, incredible growth, and then it's really, you know, follow the money, and you know, a lot of flow has gone into ETFs, and I think the next step now is going to be tokenization. Okay, and you know, with all the money that's starting to, you know, come into stablecoin, that's going to create an opportunity for traditional asset managers with product to look at that. But also, the stablecoin money is going to need to find diversification and real-world assets and start creating portfolios around that. We see our business in the next, you know, 3 to 4 years. 100% of our products will be tokenized.
Oh, that's amazing. Gabor, any additional thoughts on that?
Just, pirate ship is a good example. I have a much worse example. And when I started working in the ETF space and first talked about Bitcoin, and that was around 2013 on Wall Street, and Bitcoin no one cared about really on Wall Street in 2013, and so I just tried to sell ETFs. And when I brought up ETFs to a pension fund or a bank, they were looking at me like I'm selling cocaine. Like literally, they didn't understand the space was so new, it was so touchy, and I think that's where we are with the tokenization space. People don't know that these new types of instrument exists, and what happened with ETFs, it went from, you know, at that time probably $500 billion to $20 trillion globally, and I think we're going to see something similar with tokenized assets. And so I'm excited about it, because right now these things are, at least for a little bit, they're taboo at institutions, but once the right structuring takes place and people see it in the world, I think quickly we're going to see tremendous growth. And just to, again, put it into context, the consensus is that we're going to see $30 trillion worth of tokenized assets by 2030. So the next 5-7 years, I think we can get to that number. And my hope is that it it will be all built on Bitcoin, or at least a substantial portion of it.
You've kind of front-run my question. My next question was going to be flash forward 5 years. How much of the ETF industry do you think is going to be tokenized? And then how much of that do you think will be built on Bitcoin-based technology? Maybe, John, you're probably well placed to answer the first part of that question.
So again, we see the ETF issuers moving towards tokenization, and I think BlackRock even announced they're going to do all of their funds will be tokenized, and we'll be working with groups like Liquid and Hadron. And then I think the whole ecosystem, and that's a lot of it is trading, market makers, exchanges. Especially as the user groups grow significantly there, you'll see a lot more liquidity, and the ecosystems will move towards this. So I think it happens quickly.
What are your thoughts, Adam? I know you have a lot of conversations with institutional investors and issuers. How much of kind of what are now considered mainstream conventional securities products do you think will end up being tokenized in maybe the next 5 years?
Yeah, I mean, I think that the Bitcoin trading world has a lot to offer as compared to the traditional financial trading venues, in the sense that you have 24/7 trading, you have what is effectively a digital share certificate which you can transfer to a wallet and transfer to another platform. If you try to move shares between one brokerage and another, it takes a long time. It's kind of manual, error-prone. So you've got a much more efficient process. You've got 24/7 trading, and you've got much better market access because, at least with the treasury companies, you can see that some of these companies are incorporated on and listed on small cap exchanges. So, the Aquis exchange in the UK, or the Nordic NGM market, or even the Paris exchange. It's proving quite difficult for somebody with a Fidelity account or an E-Trade account in the US to even get access to it. And that's a major market. So for somebody living in India or Africa who wants to buy these kind of things, it's actually very difficult. Maybe they can't get access. And so I think what this kind of neo technology is giving is a much more uniform, easy access, 24/7 trading environment, which ultimately helps liquidity in a wider, sort of more global, accessible liquidity across a longer tail of financial instruments that are less kind of trapped in a time zone or trapped in a geography or a market. So I think that's all good, and should ultimately drive, capital formation is a big part of modern society, right? So increased distribution globally is only a good thing.
And provide, it's a good point, and provide more access, because I think there's a lot of people with stable coin and tokens that don't have access to all products out there. So as you tokenize real world assets, it provides more, everyone gets more access to it.
Yeah, I think that's exactly right. I mean, I think that's kind of the success behind Tether in part as well too, is it kind of got big from the outside in places where the domestic currency was kind of weak, and then there's an alternative like USDT, the money naturally flows to that kind of asset. And I think it's the same probably for tokenized securities and tokenized assets. Anyone in Switzerland or Canada or the UK, you have easy access to a lot of these products, but the rest of the world doesn't. And I think there's a lot of opportunity there to kind of bridge that gap for those people. Gabor, any thoughts on access before we wrap it up?
No, I think access is going to increase. What we like to say at Tether, and USDT is the most successful real-world asset, a little over $180 billion in assets. We focused on the half of the world that does not have access to payments. Now that other half of the world, mostly emerging market countries in Southeast Asia, Central and South America, will get access to capital markets for the first time. So local businesses will be able to raise capital, issue bonds, issue equities. Private equity can relocalize. You don't have to wait for a random guy on the 27th floor of Goldman Sachs to issue a water utility bond in your country. So it's fundamentally changing access. So I think it's huge. Again, I think, as I said it too, it does not happen often that 35% of the GDP of the world transforms. This is what's driving that transformation.
That's excellent. Well, thank you guys very much for your time today. I really appreciate it. And I think we're going to have some exciting things to announce and to work on in the next couple of months and quarters. Thanks a lot.
Thank you.